Hey guys, Outhenticfx here. If you got this far into the course, I am very happy. I hope you're enjoying it. Today's lesson is going to be on liquidity, actually the different types of liquidity that is generated in the market, and the banks use this type of liquidity to manipulate. It's basically based around retail trading. So we've got trendline liquidity, range bound liquidity, double tops and double bottoms. These are the most known patterns or types of liquidity areas that the banks target and use to manipulate to benefit them, guys. Remember, the industry or Forex industry is built for the average trader to lose long term, right? You can win here and there, and in the long run, you'll still not be profitable. Hence why you see there's a lot of people who go around buying certain strategies and courses trying to figure out what's wrong, but they're still not profitable because they don't understand the basics of liquidity and how to use liquidity to, be on your side in the market. So with our trading style, smart money trading, we focus on trading with the banks. So we always focus on these liquidity points and IPA points imbalance in the market, and use these areas to find better entry points. So let's get into it, guys. So with trendline liquidity, we are obviously taught that you need to buy at the lows, sell at the highs of these trend lines, and this is where the generating of liquidity is built, right? This creates lots of liquidity at these areas that the market will manipulate to grab liquidity before a large move in the market can take place, right? Then from there we have the second type of liquidity, which is also known as support and resistance. In my opinion, I would call it a range because price is moving in a sideways movement, but in a range, right? So traders are taught to buy at support, sell at resistance, right? So all this does is it creates these equal lows and then these equal highs, and you'll notice that price will channel down, create that low, create that high, create that double bottom. People start buying, right? Once people start buying, the banks then kick everybody else out and then drive price to where they want price to go, right? Grabbing liquidity, and that's called a stop loss hunt, guys. And then from there, it will start consolidating within another zone, right? You can see price pushes up, support turn into resistance. Traders say so they wait for price to come back to create that second touch or retest of that area. They start selling, not knowing that eventually the banks will manipulate and take them out of these highs, right? The banks will always take out the equal lows and equal highs before they make their major push. So this is that major push, this is that major push. So eventually now, look, we take out these equal highs, right? Take out these equal highs with this push, and then from there, what do traders say? Oh, okay, cool. Resistance turned into support, so they start buying from this area. So within all these different patterns on these double tops and double bottoms, there's a lot of manipulation happening, whether it's wicks, whether it's large body candles just pushing up aggressively non-stop, not respecting these areas. That is something that you'll usually see. Once price gets to where it wants to go, maybe to a supply zone, maybe to a certain supply zone over here, it will then drive price all the way down to take out that. That's why I have liquidity swept over there, guys. So what we do is we look for areas in the market where we know that the banks will target, and we trade off those areas, because once price hits those areas, guys, whether it's a supply demand zone in an institutional candle, we know that the large move is going to be very possible. So all we look for is untested, order blocks, and we're gonna get into order blocks in the next lesson. So to just show you a live example on the chart, I can show you here, right? You can see retail traders believe that the more zone is tested, the stronger it is. Okay, cool. We have price consolidating. We have that break of structure to the right side over here, break of structure. Once we create that low, we come up, we create equal highs. This is a double top, right? So imagine this, guys, right? The market now has multiple orders or people having their stop loss right above this level here. Let me just fix this. Take this down here. They're targeting these lows over here. And then from there, stop losses are just packed over there, guys, right? Once the market does this, you can see people are selling. Gets here, people are now buying. So the market has trapped sellers and buyers. So usually, depending on the trend, which is still bullish at this point, the market will kick out the the buyers first, right? And then drive price all the way up to kick out the people who have their stop loss resting there. So you've got stop loss resting there, and then from there you've got people stop losses resting here. They're trying to target these areas here. Okay, cool. Vice versa, guys. So the market does not respect these patterns. You can make money from these moves if you know what you're doing, but long term it will not work out. You will always get kicked out. Imagine what would be, imagine how the market would be if everyone would win. You know what I mean? It wasn't built for us to win, it was built for the banks to make money. Guys, the market is controlled by central banks. No individual controls the market. No company controls the market. That's all a lie. All the market does is move because of the central banks, guys. So these double tops, double bottoms, which we know as equal highs and equal lows, are never going to work at all. Imagine now here with the support and resistance, look at the wicks that are happening. Let's for example put in this resistance, right? Look, these wicks are the banks kicking people out. Let's put the support, which will obviously be here. Look at these wicks. That's all manipulation. The banks will pretend like price is being pushed up, come back, kick you out, go back up, kick you out again. You know, the banks will always clear liquidity first because there's multiple orders just resting above and below these areas, guys. So looking at trend lines on the side here, we've got trend line, right? This is a trend line, obviously, that retail traders use. So they're all buying here, buying here, buying here. But all that's creating is liquidity at the lows. The banks will then drive price all the way down to take out this liquidity and then decide where they're moving the market, guys. So within these trend lines, you can see equal highs. The banks created equal highs, faked out people who are selling, kicked them out with this entire move, broke structure. Then from there created this double bottom, this double bottom over here. What? Builds liquidity. So the market is always based on building liquidity. So if we know how to use these liquidity areas in our favor, we'll always be profitable, guys. So these are the different types of liquidity in the market. Let me show you an example of how we can use liquidity to our favor. So let's go with this example over here. Perfect. Here's a trend line right here. All right. We've got a nice down channel here, right? Retail traders love using trend lines, so let's use a trend line so that we show you what happens within these areas, right? So I've got a trend line here, guys. We do not care about buying and selling in these small moves. We want to catch the big moves. We want to catch the big moves, guys. So since we know that, okay, cool, we broke structure here, right? Broke structure here. BOS bottom. This now becomes our supply zone over here. This area of consolidation. This becomes our supply zone. Move this up. This becomes our supply zone, guys. From there, we mark off our last bullish candle before the major move down, which broke structure, which is this. So this is our institutional candle. If I drag this all the way to the right side, look what happens, guys. Where do the banks drive price? They're kicking everybody else who are selling and holding these sells. Kicks them out, right? Comes into our favor. And then that's when we enter, guys. This game is about waiting, guys. Patience is key. Patience is key. I will teach you how to, find entries on these type of moves and catch these pips. Look, imagine all we needed here was the 11 pip stop loss to make 126 pips. Imagine it's still tanked. We could have held it all the way going down, guys. All the way going down. 163 pips. We're not worried about double bottoms, double tops, and all these fancy stuff, right? So we're going to get into supply and demand. I'm going to show you the areas in the market where we know that liquidity is being built everywhere in the market. You can see here example here, equal highs, which is a double bottom. All right, let me delete this trend line quickly. Equal highs. All right, here we've got what you call it, here we've got IPA from this candle here to here. Got IPA, insufficient price action, meaning I will teach you guys about this, but this is just basically when price creates large body candles but do not have any wicks that fill that candle. So for example, here you can see price just from this level here pushed up all the way here, IPA, insufficient price action, and then came back to fill 50% of this IPA over here. So all of this is IPA. When we see these large body candles like this but don't have wicks to fill them, the banks will always bring price up to at least fill 50% of that imbalance and then continue their direction, guys. So IPA is also used for us, to see where exactly the market wants to take price, right? Even though there's supply and demand zones all over here, we are not interested in these minor, supply and demand zones. The expansion that started, or the first expansion that started from that first supply zone, is the main supply zone, which is over here. You can see this one clearly. I can even mark it off as distribution right here, red. So we always look for that first expansion, right? The swing points. And then from there, we mark off our institutional candle in a supply zone. Let me just write that down for you. Supply zone. The institutional candle is the last bullish candle before the major move down. And then with demand, the last bearish candle before major move up, right? That is supply and demand. That is your institutional candle. So obviously here we can see we broke structure. This is the last okay, we do have this bullish candle here, but I prefer using this one because it's at the high of this entire range. So this is the last bullish candle before the major move down. So after this bullish candle was printed, look how price just suddenly started dropping, right? So price will always come back into the supply and demand zone, guys. So we don't care about trend lines and trying to buy and sell in these small tiny moves, guys. Let's not waste our time, because eventually we can literally wait. Okay, from here we started on the 25th all the way to the 5th of July, right? 6th of July, right? We wait a whole entire week, guys, for this to play out, because when price comes to our favor, we catching the big moves. 162 pips with a one lot, that's $1,630, guys. You know what I mean? So let's be very wise with how we trade. Let's not use, the retail method and ways of trading. Let's focus on catching those big moves, guys. All you need is to catch the big moves, guys. All you need is to catch 1 to 2 trades even in a month, but just know that you're making your money. So with a one lot, this would probably be 16,300. My bad. This would probably be 16,300, guys. So yeah, guys, that's the lesson for today. We are not focused on trend lines, double tops and double bottoms. We focused on supply and demand, bullish and bearish order flow, and figuring out where liquidity is and where liquidity needs to be so that we can get the best possible entries in the market, guys. Very simple concept, very simple to understand, guys. Just be patient, wait for your setup, execute, and you're done. You really don't need to be placing 15 trades a day, guys. All you need is one good solid setup and wait for that setup to play out, guys. So yes, guys, this is the lesson for today. This is how we can use liquidity and these patterns to best benefit us in the market. Okay, cool, guys. See you in the next lesson. Ciao.